Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Joe Clark, founder and managing partner. So glad to have him on this week, and so glad for you all to click and join us. Where we're going to talk a couple of points around the economy, and then also talk about sentiment around bonds, and more specifically how we think about that, and in terms of our positioning for the portfolio. So let's just dive right into the soft landing versus hard landing scenarios and what that means. Those terms have been thrown around a lot the past few years, just kind of with the assumption that everybody knows what we're talking about. But essentially, in this scenario, the reference is to using a metaphor where the U.S. economy is a plane flying through the air. Because inflation was running so hot, the Federal Reserve had to jack up interest rates. And so the debate and the ongoing back and forthness has been whether the economy will have a hard landing, which is where nearly everybody thought was going to be the case going into 2022 and parts of 2023, to a soft landing where they're able to just kind of gracefully land the plane without damaging the whole economy, which has been most of the consensus ever since then. And so where we at today, well, if you go back to early August, we really had a surprising jobs report that for the first time in a long time showed a little bit of softness. And so that began to spark fears that we may be transitioning back to a possibility of a hard landing. I would tell you, both of those are always a possibility. We're in a cyclical economy with a lot of moving parts, and we have to respect that anything could happen. But if we zoom out and take a little bit of a bigger look, we can realize that August jobs report, that was the one lone thing thrown in there, was just one piece of a big puzzle. And putting it all together now, zooming out, we can see there's a pretty decent looking forecast for the economy for the quarter that we're in. The blue range there shows you the blue chip economist forecasters. Those are the ones that report on a continuous basis to Bloomberg. They're right there where they almost always are, centered around about 2%, which is right around our economy's potential, where they would be growing without overheating. And right now, that green bar, the Atlanta Fed has a pretty good GDP nowcast, which takes all of the incoming data and puts it into an estimate for where we are. And they show us right around that 2.5% to 3% mark where we have been running. So all evidence right now is that we are still continuing to chug along and to have some reasonable growth. Again, that is all going to change in a cyclical economy. There's always going to be a landing of some nature. But for now, we are gliding along. And I'll let Joe take this a little bit further.
It's interesting. We started the Market Carver back in '07, and I am really proud in the last 17 years, we've missed 1 week. And the whole intent for the Market Carver is for you guys to understand what we perceive to be the most important economic and market news last week. So whether you have a hard landing or a soft landing, the bottom line is the U.S. economy is continuing to grow, and they're going to put up a chart for you here in a second that really shows you the level of U.S. economic growth. You just got to, it's like the Olympics. We've got all the gold medals, and life is really, really good. You can look at it in contrast of other things. Now, economically and really in all aspects of life, people try to find the whodunit. We don't feel satisfied as humans without saying that this is the cause. And you can go through a lot of different scenarios to say this is what did it or this is why. I still believe when you go back to the demographics and the baby boom, that we are at a period of time where we have some of the best demographics. Now that will change. But the other part, the thing that America has always got the gold medal in, is not just innovation, but adoption of that innovation. How do you use it? How do you apply it? And when you look at that monstrous growth that we have, it just tells you the machine that we have here in the United States. So I'm void of media influence, so I don't deal with the negative news or the this is good or this is bad. It's just data to me without all of the emotional attachment. This chart should pretty well indicate to you and show you that trend that we have really is an economic superpower. And I enjoy watching what's going on in those other countries just to see what's happening. Eventually, they're either going to get stronger, or the United States is going to get weaker. In theory, you'll have that reversion back to the mean. But in the meantime, the U.S. economy remains strong. We'll watch what happens as we move into this fear-based part of our world with elections. But economically, people are still spending, we're still innovating, and we are still growing. Whether it's less than what we thought, it's still positive, and life is good. Adam?
Yeah, absolutely. And we do spend a lot of time. So just give you context here. We always want to distinguish where the economy is going versus where the market is going. That's especially true for the stock side. They're a little bit more closely intertwined on the fixed income side. You will see yields really reflect economic activity much more closely. So it has a bigger lens there. So in that end, I think it's worth taking a look at where we've shifted bond sentiment wise and just how we use sentiment in our investment philosophy. You'll also see us not necessarily use it directly, but allow it to send us a signal when it's time to look out to go the other way. When sentiment runs overly optimistic, it's time for us to at least begin to question whether or not we want to be in that big of a crowd. And conversely, on the pessimism side, once people are on a sentiment registering themselves as pessimistic and you get too many people on that side, well, who is left to sell is kind of the question. So we see here, Bank of America puts out a pretty robust manager survey, and we see record sentiment on bonds. And a lot of this has been on this shift after the August employment report. All the way here at August 24, you see near record sentiment, meaning a lot of people have become optimistic on bonds. They are bond buyers, meaning they believe yields are on their way lower, that this soft landing, hard landing dynamic will lead to a Fed one way or the other able to cut in September and going forward. So we have been more bullish on the bond side than we had been at any time in 21, 22, 23. But we do have to begin to question how much we want to participate and how much the bond market may be getting ahead of itself just because the economic growth isn't collapsing. And we need a bit of a harsh landing to really justify much lower bond yields in our opinion. So I want to turn it back over to Joe and let him close out and take you home.
You know, we really appreciate you guys tuning in every week. I've been asked to give you a shameless plug for the Retirement Runway. My book's out. If you haven't received yours yet or haven't asked for one, please do. We're getting a lot of great response on it. And if you got friends or family or kids, that's what we're seeing a lot of people hand it off to. It really shows the theme that the Financial Enhancement Group has, the beliefs that we have. It's not a how to manage money book. It was not designed to be a technical book. It's more of a philosophy of understanding what money is. And, you know, Adam hit a couple of our keys. We're far more concerned with economic trends than we are the raw number of whether it's good or bad. It's relative. Which way is it going? Which direction is it going? And, you know, you don't just react to what's going on in the market. And I think that's so important. What we try to do here at the Market Carver, we do our best to respond with well thought out discipline. And I will give Adam a shout out just here on the Market Carver. It's, you know, I deal with a lot of money managers. We obviously take care of stuff internally because we believe that tax control and the implication is significant. But when I see the other managers struggle in the fixed income environment, it's almost like Adam was born for this part. So if you see a little twinkle in his eye when he talks about bonds, I realize that's not natural, but it is natural for him. And when it comes to your portfolio working for years to help you complete the financial journey, that is a critical thing. If you haven't got signed up yet for your Next Steps meeting, please make sure you take the time to go to our website at yourlifeafterwork.com. You can find some information that's there about what's going on, things that are happening next on the FEG calendar. And we look forward to seeing you soon, sharing a cup of coffee and just having a good time. I hope you enjoy this wonderful weather. We are in Joe time, when you can wear a sweatshirt in the morning and shorts in the evening. Life is good. Hope you enjoy it. Thanks for tuning in.